ETH was down almost 30% over the weekend, thanks to Mr. Trump's tariffs. And we were just saying to each other, God, I wish I could hit the buy button. But like
our ETF, that's a pretty good run rate. And I think people are just dramatically underestimating by a factor of like 10 how much money needs to come into this space over the next 5 years and how much money is going to come into the space.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be listening to some insights from industry-leading experts from some of the world's largest organizations, giving you all their perspective into this digital asset ecosystem and the future potential that it holds. With that being said, if you guys enjoy these types of video breakdowns, do me a favor, smash that thumbs up button and subscribe. The reason why I'm even breaking this video down for you guys, I want you to take a very mature perspective here with what it is that I'm going to show you guys. The video clips that I'm going to display have hardly even 300 views combined and are all uploaded within the last month. I want to remind you all that right now is a time to stay grounded in what matters. The important developing fundamentals, the interconnected webs, the partnerships. I want to remind you guys to tune out the noise and to focus on real data, not only to protect your portfolio, but to protect your peace of mind. And so hopefully in today's video breakdown, I can do my due diligence by showing you guys perspectives from industry-leading experts like this gentleman here, Joseph Cholom, who is the managing director at BlackRock, as you can see down here on his LinkedIn profile, who just the other day said this on stage publicly.
I'm a futurist and I'm an optimist, and I think this is the entry-level drug and the first test case for completely digitizing our ecosystems. Sandy told you that all our infrastructure has been built over decades and decades and decades, and it's creaky. We have a view that the internet went through phases. We believe blockchains are going through phases. I'm going to be a little bit excitable here. It's possible as we think about these chains that gaming and NFTs and meme coins are practice for massive adoption of not just financial services transactions, like billions and trillions of them, but usage in the real human economy. Like actually your day-to-day, you're interacting with payments in a digitally native manner. And maybe these first few phases are testing and challenging the chains to be able to handle the volumes that are coming. I'm not prophesizing what's going to happen and it's going to be hard. I think this is going to be more transformational on financial services in people's lives than the electronification of the equity markets, the electronification of the bond markets. Those took decades. This has an ability to massively accelerate transformation, and that's the beauty of the technology.
That is absolutely massive. We're also going to be listening to industry-leading experts like this gentleman here, Eric Polikov, who right now is the global head of the ETF Capital Markets Fund for Invesco.
How did we get to where we are today? What's the last couple of years been like? Yeah, I mean, it's pretty straightforward, but a lawsuit that the SEC lost, or was overturned, I should say, allowed for a little bit more clarity in the U.S. markets for exchange-traded products to be listed. They moved us all to the starting gate, and on January 11th, they shot the gun and allowed us all out. All that being said, I think a firm like Bitwise and others not named Invesco are really going to be driving the product development and the things that are really going to revolutionize the crypto markets. And whether you look at things like volatility or momentum or indexing or covered call writing, downside protection, so on and so forth, take your pick, that we've done for the equity and fixed income markets and even the commodity markets to some extent, we're going to do the same thing with crypto.
I think this is going to be more transformational on financial services in people's lives than the electronification of the equity markets.
Momentum or indexing or covered call writing, downside protection, so on and so forth, take your pick, that we've done for the equity and fixed income markets and even the commodity markets to some extent.
Than the electronification of the equity markets, the electronification of the bond markets.
In fixed income markets and even the commodity markets to some extent, we're going to do the same thing with crypto.
What an absolutely massive statement from a large representative from Invesco. And this leads me to what I said to you guys over on the X Space the other day. Again, taking a very mature approach, no bullish moonboy hype here. I said to you guys, the crypto recovery will be nothing short of epic. Wealth is built when capital is deployed at discounted prices, not when everyone is chasing pumps and hype. You need to understand that this pullback was inevitable. Some heeded the warnings, others did not. But now that we are here, the real question is, how will you respond? What will differentiate the successful from the rest is how you react to moments like these. Let's be clear. Crypto is not retreating in the moment because of technology failure or infrastructure failing. In fact, the last 6 to 8 months have seen more positive advancements in the crypto space than the past 5 years combined. The reality is, crypto is still highly correlated to risk-sensitive markets, and right now, the risk sensitivity is lingering, while safe haven assets are in high demand. But here's the key. Once the market uncertainty subsides and regulations become clearer, institutional money will flood in. And those calling crypto a scam today simply because they don't understand pullbacks take place will be left wishing they had bought in these discounted levels. Now is the time to lock in, not the time to be fearful.
Matt and I were talking earlier about how, ETH was down almost 30% over the weekend, thanks to Mr. Trump's tariffs. And we were just saying to each other, God, I wish I could hit the buy button. But like we're companies where you have to get things pre-cleared and so on and so forth. ETH was down almost 30% over the weekend, thanks to Mr. Trump's tariffs. And we were just saying to each other, God, I wish I could hit the buy button. But like what's next is I'll use a US focus only for now, is banks. Publicly traded US S&P 500 banks are now going to be in this world. And that's the Goldman Sachs and JP Morgans, Morgan Stanleys, et cetera. They are going to be players in this space in a way that we have never seen them play. They are going to be players in this space in a way that we have never seen them play. They're going to be financing, they're going to be trading, they're going to be backers, they're going to be custodians, they're going to be all part of the world of crypto that they weren't allowed to be in, at least in this country, in the United States. So,
and back to this post, me saying the crypto recovery will be nothing short of epic is because we're also going to tap in and listen to industry leading experts like this gentleman here, Matthew Hugan, who is the Chief Investment Officer at Bitwise Asset Management, give you all his perspective. For those of you all who do not know who Bitwise is, according to the available information, Bitwise Asset Management appears to be the largest crypto indexed fund manager in America. And you are hearing the chief investment officer of this organization sit on stage and say this.
I agree with both of those points. I'll make a third point. I think what's coming next is way more flows than most people expect.
These first few phases are testing and challenging the chains to be able to handle the volumes that are coming.
I'll make a third point. I think what's coming next is way more flows than most people expect. And I'll give you 2 reasons for that. If you look at ETF history, the first year is never the biggest year. If you look at GLD, it was the largest ETF launch of all time, basically, when it launched. It did $3 billion in its first year. It did $5 billion in its second year, $8 billion, $12 billion, $16 billion, and then $22 billion. I would make another point to you, which is think about how much Bitcoin you bought the first time you bought Bitcoin. And now think about how much Bitcoin you own today. And I bet it's more, just from people doubling down. Everyone assumes these flows are going to be like this bell curve, and we're already on the downslope. I think it's an exponential curve. When we launched our Bitcoin ETF, people thought we were crazy for pricing it at 20 basis points. I was like, if you take 20 basis points and it's a $50 billion ETF, that's a pretty good run rate. And I think people are just dramatically underestimating by a factor of like 10 how much money needs to come into this space over the next 5 years and how much money is going to come into the space.
So again, all these perspectives are from industry leading experts in this field sitting on stage from just a couple of weeks ago, ladies and gentlemen. And each of these video breakdowns that I've just shared with you all, for example, this one has 16 views, or these 2 individual representatives on stage from Invesco and Bitwise literally said they wish that they could buy the dip, but regulations are stopping them from doing so. If you have institutions sitting on stage saying they wish they could buy the dip, ladies and gentlemen, put 2 and 2 together. Again, not financial advice. Oh my goodness gracious, 16 views. This is insane. The video from the gentleman at BlackRock has 264 views. Combined, not even 300 people have seen this information, which is why I'm bringing it to your attention and trying to get you guys to see now is not the time to be fearful. Now is the time to lock in, to pay attention to the organizations that are building, that are developing, that are connecting with large institutions to help build out the infrastructure, so that way when regulations are clear and these institutions can onboard, oh my goodness gracious, we're going to see the biggest inflow that we have ever seen in crypto. In my personal opinion, we have seen nothing yet. Looking back in 2, 3, 4, 5 years, however long this is going to take, because I don't have a crystal ball on when all of this is going to take place, but I do know that eventually we will see a market recovery, and it will be exponentially bigger than the most recent pump that we've seen over the past year.
And I think people are just dramatically underestimating by a factor of like 10 how much money needs to come into this space over the next 5 years, and how much money is going to come into the space.
And this same gentleman, Matthew Hugan, said just the other day from a fundamental piece from February 24th, 2025, Bitwise says substantial XRP ETF demand is set to drive dozens of launches this year. I'm telling you guys right now is the time to buckle up, to pay attention to detail, and not to be shaken out because of the short-term correction that we are currently experiencing. Again, who knows how long this correction is going to take place? But one thing I do know is that when the fear, the uncertainty, and the doubt subsides in the market, we are still in the midst of massive institutional adoption of crypto and digital assets. So do not get shaken out. As always, bringing you guys the realest information. Do me a favor, smash that thumbs up button and subscribe to the platform. This one was an absolute banger, and I really enjoy piecing these little tiny gems together for you guys. If you enjoyed them, then subscribe to the platform before you jump off here. Keep in mind that all of this information and each of these video breakdowns you can find in the CYPRX private Discord if you want to jump and dive into this research yourselves. And with that being said, I will see you guys in the next video breakdown.